Be Wealthy and Smart, episode 1324.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how the S&P has had more record highs since 1998. Now, a lot of people are using that data to say we're somehow near the end of this bull market, but I don't think so. To me, we've just begun the AI narrative, and yes, that is moving stocks up quite a bit, which is similar to what happened with the dot-com era, but in that dot-com decade, that trend went on for years. It wasn't a one-year trend or a two-year trend. It went on for 6 or 7 years. Like the dot-com trend, AI is going to give a big boost to stocks because it's going to increase their profitability. You see, in the dot-com era, we were just getting the internet, and people didn't really realize what the internet was or what it was going to mean to profitability for stocks. In the internet era, people were talking about eyeballs and lack of brick and mortar buildings, but they really didn't understand how having a website was going to bring money into the business and how it was going to create so much more profitability, to the point where a company like Amazon that was 100% virtual was going to have a tremendous advantage over brick and mortar stores. But that's not how it was seen early on in the trend. Like the dot-com era, the AI era is confusing a lot of people. People see it as something that has become a bubble, rather than seeing it as something that's going to add immense profitability to the bottom line of many companies. And it's not just the Magnificent Seven that are going to be able to use AI. Right now, they have the deepest pockets to be able to invest in it. But that doesn't mean that smaller companies can't use AI. Even I am starting to use AI in my business and finding it a tremendous way to leverage time. Essentially, every business can use AI to do something, whether it's writing or creative work or research. There's all kinds of things you can use AI for. We're just scratching the surface, and in my opinion, there's going to be huge changes in our life that we can't even foresee right now. Just like when Brad Garlinghouse, the CEO of Ripple, told us that who knew during the internet era that you'd be able to have a phone, touch something on the phone, and a taxi would show up at your door. But what we can tell right now is that profitability can be enhanced dramatically with AI. It can do the work of hundreds of people, as I've reported on earlier podcasts. Now, this is being used right now in the support area with chatbots and things like that are run by AI that are having much better results than typical chatbots. They're finding the problem is solved faster and with more client satisfaction. And it means they don't have to hire as many people in the support center. That's just one example of how AI is helping companies right now and will boost profitability. But we're in for a bigger trend, and this is going to evolve over time. And we're just starting to see that extra value being added into the stock market, but I believe it's going to go on for years, and that we're nowhere near the top. So what's interesting this year is out of the first 50 trading days, the S&P has closed at record highs, 17 of them. The last time we had more closing highs in the first 50 sessions was in 1998, according to data from Bespoke Investment Group. And at that time, the index finished at a record level for 20 out of 50 days. In 2024, we've seen the fourth highest amount of years closing at record highs, going back to information from 1953. The year with the most closing highs turns out to be 1964, when the index was at a new high 25 out of 50 trading days. So this is not the first time this has happened. And I don't think it's the peak of the bubble. Now, we still are dealing with a producer price index, which rose 0.6% in February. Core PPI strips out food and energy, and that gained 0.3%, which is a little bit higher than the 0.2% that was expected. This was the last data that the Fed is going to see before they meet on March 19th and 20th. So next week we'll hear from the Fed and we'll get more insights on their thoughts. They're still talking rates up, which is to be expected. But with a lot of layoffs happening, we may see the unemployment rate tick up. And that may be the catalyst for the Fed to be able to lower rates starting in May. We'll see what happens. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.